Good afternoon, everybody. My name is Nigel Clark, the Managing Director of Momentum Energy. Welcome along to today's webinar titled Get Inspired from Small Business to Large Business. So I hope you'll find the next hour a productive use of your time. Today I'm going to cover the journey of Momentum Energy, which basically began in December 2004 through to the current day. So it's about an 8 3/4 year journey from a startup to where Momentum is today. And today it is effectively a company that employs over 250 people, and in the last financial year had revenue of in excess of 800 million. So it's been quite a growth in the period of 8 and a bit years. Myself, I've been with the company excuse me, since March 2006. Initially I headed up the commercial operations within the company, then moved into the CFO position, and then in May 2011 became MD of Momentum. So I've been with the company about 7.5 years, so nearly most of the journey from when it was a startup. So the first phase of the company is what we call the Imagine phase. Well, the page is hopefully about to click over. So the Imagine phase is really where Momentum Energy started. And it started with a young New Zealander by the name of Sean Finnegan, and he was about 24 years old, and he was the brains trust behind Momentum Energy. He had a dream, he had a vision, and basically fought to raise the equity to get Momentum Energy started. He was very persistent, found some investors, and really put the company together, and recruited the first CEO, and they started with about 3 people. Being in the energy industry, there was a lot of hurdles to overcome. You have a lot of regulatory issues, a lot of compliance issues. So getting the infrastructure right was very important early on. It was also about getting the right people, system suppliers, to make it happen. I think there was a number of lessons buried within those. There was a clear strategy from day one as to the market that we were targeting. We had a very clear focus on going after the SME market, and that hasn't really wavered to this day. So there was a clear strategy, there was a clear market segment that we attacked. The staff that were recruited really at that time, what I'll call generalists, and you had to be a jack of all trades. As you'd know, being in a small business, you can't really afford to have specialists when you're starting out that will only cover one area. So looking back at the journey, we were jacks of all trades, covering a multitude of things, and relying from time to time on bringing in specialist experts to help on any particular curly needs. As far as systems go and suppliers, in the early days, being an energy retailer, getting the bill right is pretty fundamental. The biggest reason that customers will leave you or churn away is if you get the bill wrong. So the early part was spent getting the right system. It was a company out of New Zealand that was really not far off being a startup itself at the time. I think the key thing was that the system was something that we could afford and was fit for purpose. So it wasn't a tier 1 SAP or Oracle type system. It was a system that did the basics on what we needed, but importantly was at a cost that we could afford. And as I said, we then really worked hard on getting the processes refined, so that when we did start finally billing customers and winning customers, we were accurate. It was a soft start to customer acquisition, in that we took on some friendly customers, tested the process before really going live with a much greater base of customers. And importantly, but it was important to start, and I think one of the key things is you can't afford to be perfect and wait till you think you've got everything perfect, because the reality was if we'd done that, we would never have started. So you have to get off the pot. You can't procrastinate in a small business. You have to get on and get the business going once you think you've got your mainstream core elements in place. So as far as the lessons learned in that initial phase, cash is king is such a key phrase, and it was particularly relevant to us in the early years when we were a standalone retailer, independent retailer. Paying people on time early on was really important to get the credibility of our suppliers, and such as the energy suppliers and the network companies, but also credit management just as much in reverse, making sure that we had strong credit management processes in collecting our funds and getting paid, because at the end of the day, if you have a cash flow disconnect, as you know, it puts enormous pressure on small businesses. So trying to match up those cash flows was super important. As I said earlier, we focused on getting the setup right. We focused on getting staff, as I said, that were generalists. We started in a controlled and measured manner, but importantly, we didn't wait till everything, as I said, was 100% perfect. We then moved to Kenny Rogers and the Gambler, when to hold them and when to walk away, and this was an interesting phase for the company. At this time, we undertook some fair amount of expansion. We gained some licences in other states in Queensland and New South Wales for electricity and gas. We opened up a South Australian office, and we started, as I said, to look at broader ways of expansion, and we did two due diligence at this point in time. We had a look at another energy retailer in Sydney and a moving home channel based in Melbourne. In both cases, we chose to walk away, which was really important. In case one, in the move home channel, the price was too expensive. And in case two, in acquiring the other energy retailer, we really found that their fundamentals weren't sustainable and too risky. And in hindsight, we came to exactly the right decision, because that retailer then folded in the market probably barely 8 months later and went broke. So it was a key time and really some fundamental lessons from a growth point of view. It was certainly do your due diligence thoroughly and bring in experts when required. We brought in certain accounting and tax experts at various times, in particular, to help us look at those transactions. But as I said earlier, you also need to know when to walk away. Don't get deal fever. It's very easy to get caught up in an acquisition and really want to buy something. You put a lot of time and effort and energy into the deal, and at times to just say, no, it's not the right thing, and walk away, it's probably one of the hardest things to do. But it was the right thing to do, because it came down to really quality over quantity, and in our case, the quality wasn't going to be there. As I said, cash is king. You have to make sure that when you look at such opportunities, it is sustainable, that your cash flows are sustainable in taking on larger enterprise, but also understand what your stress points are and do proper scenario analysis so that you can ride the highs and the highs and the lows of the lows. So very important to have that spectrum of understanding, and really importantly, have a clear strategic linkage to expansion and acquisitions. Be very clear on why you're doing it and how it's going to marry up and strengthen your organisation. From there, we entered a pressure period, and really the whole energy industry in Australia entered a pressure period. It's not that long ago, barely 6 years, but you'll remember Australia had a pretty severe drought that went, in the East Coast in particular, went for about 8 years. Around 2007, 2008, it was becoming fairly severe. The little map I've attached at the bottom there just gives you some perspective of where some periods were experiencing record dry periods. This drought really started to impact the energy industry in a number of ways. Energy prices started to escalate heavily, and I've got a couple of slides that will demonstrate that. The eastern seaboard came within 7% of demand exceeding supply, which effectively in layman's terms means that we got pretty close to having rolling blackouts. You had network companies that make up half of our bill demanding more and larger bank guarantees. The futures market went very volatile and was putting also a lot of constraints on cash and what they call cash calls each and every day. So there was a lot of pressure building within the industry, and really started to hit. A sign of that is, and I don't expect you to understand fully the energy market, but If you look at this graph, what's called the pool price that sets every 5 minutes in energy, typically it was bouncing around between 20 to 40. We started to get periods where on a regular basis it was bouncing into the thousands, and this graph here is averaging over time, and you can see that it's gone from around that 20 to 40 range up until the high hundreds. It was a very volatile period, and an example I'd liken it to there is a pizza maker, where if you view cheese as being a major element into a pizza and you might be buying it at about $8 a kilo, if you suddenly had cheese go to $30 a kilo, but you can't change the price of your pizza, that was effectively the scenario we had back then, because energy prices were regulated, as they are still in some states today. So in essence the price was capped, and yet this underlying wholesale price of energy had effectively tripled. So it put enormous pressure on momentum, but also on the industry. and it was, we weren't alone in having that issue. So we had to really work through what this all meant and how we were going to keep the business afloat. So it was a fairly stressful period of time, because what had been profitable customers had now really become liabilities, where they were losing money. On some of these days when high temperatures were occurring in summer, you had spot prices going very high. So it was a very tough environment. So what were some of the options that we contemplated? One was to stop selling and simply hold, or even scale down and ride it through, hoping that the drought and these high market prices were just an aberration. Another option was to lose customers by increasing prices, and if they stayed with you, then so be it. That was a good result, but letting customers go, which is obviously not a great brand positioning for us at the time, because you don't like to lose customers by inordinate price increases. We had the option of pushing on and having the issue of potentially down the track, if these high prices had held for another year or two, having the issue of when we had to renew these customers in the future, renewing them at a much higher price, or possibly having business failure because cash flows were getting very tight. And in the energy market, you can basically be called up at 10 a.m. the very next day to top up what they call credit support. So we basically had some days where they would give you a notification to put in $1 or $2 million straight off the bat. So you had to have deep pockets to sustain what was going on in this energy market. So what did we do to reduce the risk? We did a number of things. We actually sold off some customers, and that was a hard and painful decision, because having worked very hard over a number of years to build up customers, to sell them was not an easy choice, but it made sense financially, in that we received some funds for selling those customers, but more importantly, we removed the wholesale energy risk overnight once those customers moved off our books. As I said earlier, we increased prices to some customer segments that we thought could absorb it better than others. So we basically increased our cash position and protected our EBIT, albeit a lower EBIT but a more secure EBIT. And lastly, looked at reducing costs, and we basically stopped selling for a period of time and went into selective retention activities and had to reduce staff numbers, which we hadn't had to do up to that point. We'd been growing since day one, so once again that was a difficult time to have to let go about 15 staff. So it was a pretty tough situation, and we learnt a hell of a lot of lessons, I can tell you, in that time. If we hadn't moved quickly, we would have been dead in the water. So you've got to keep calm, and think it through and move quickly. Don't procrastinate. We had to prioritise because we had to create some headroom in the earnings. So we looked at our asset management and firm cost control. So as I said, we got rid of some assets. We put on very stringent cost controls and had the attitude that nothing is sacred, and obviously when things get tight, that has to be the view. You have sometimes your things that you might hold sacred in a business that you could never contemplate letting go, but when you hit these type of patches, everything was up for grabs. We had to lose customers that were making a loss at that point. One thing I'd say is think HR, make sure you've got processes that are solid from day one if you are likely to have to shed staff, because if you do it the right way, then it can be okay. If you do it the wrong way, then it can be very painful, complicated and expensive. Protect your brand, and most importantly, protect and foster your staff morale. So even though you're trying to turn the ship and it's a hard time, basically you've got to double your efforts and go on and above and beyond at these times in motivating the staff that are the ones that are the keepers that you need to get the ship through the hard times. So really need to focus strongly on those people and the staff morale, and look at innovative, sometimes innovative REM type packages that will hold people through some of these periods as well, to give them some added comfort and incentive to stay the journey. So the end of the world as we know it, we having survived the energy crisis, we then looked to grow the business again, and had been looking for funding to back our growth in the market. And this was an interesting time. We were dealing with one company at the time out of Sydney that was quite a large funds management company at the time. Basically had signed an MOU, and when the GFC hit, this company was almost one of the first to go out the back door, so we suddenly had lost what we thought was a line of funding. We then were dealing with one of the major banks off subsidiaries, and basically once again had reached an agreement there, and then that bank was rumoured to be going to be sold, so they basically stopped lending and talking as well. So we suddenly found a position where, like a lot of companies at that time during the GFC, where basically funding dried up and there was nothing available. We continued to then still have some drought conditions and some high energy prices, which once again made life pretty interesting. So we couldn't get funding, still had some large cash calls. So these things really led us to work with our board on a position of saying it was time to sell and try and find a buyer that matched up with Momentum Energy as being a retail business. So we were a retailer, and our target was to try and find a generating company in the market that needed a retail business and try and find a match made in heaven, if you like. So that was where we where we moved to in our next phase. It was an interesting time. Just like the finance company that went out the back door, we started talking what was then Babcock and Brown. Babcock and Brown had some generation assets, but didn't have a retail entity, and it was a pretty good match in structure and culture and what they wanted to do. Probably a couple of months after we had started dialogue with them, they ended up acquiring some assets that they probably didn't expect to, and as you'll know, the rest is history. Babcock and Brown then went into a bit of a tailspin, and the corporate entity eventually unfolded. So we thought we had a sale and suddenly realised we didn't have a sale. So we had identified a number of parties at this time that we thought were potential buyers, and one of those was Hydro Tasmania, who was a hydro generating entity in Tasmania and who had now come into the national energy market in Australia through the cable that is run from Victoria to Tasmania under the sea. And they didn't have a retail arm in the market, so we started dialogue, and after quite a few months honeymoon led to a sale process where Hydro Tasmania purchased Momentum Energy. It was an interesting time, but because it wasn't an outright purchase, they purchased half of the business, and we ran for the first year under effectively a joint board, and that was not an ideal situation. As you can imagine, if you have two shareholders with earn-out methodologies, they both have different drivers, one obviously wanting to pay a lower price and one wanting to earn a higher price. So that year was not a easy year for management in the company to be running under a joint board. Thank goodness we had a good year, and Hydro Tas decided to exercise the option and buy us a year earlier than planned, the balance of the other 50% effectively. So we ended up becoming a fully owned subsidiary of Hydro Tasmania in September 2009. So the lessons through that period were pretty interesting. Obviously target the right buyers, so look for people that have a natural match and a good match to what your business may be. Look to create competitive tension in the sale process, and that's not always easy, especially when sometimes other parties you thought you had in the competitive mix suddenly aren't in the mix, as was our case with Babcock and Brown. Getting to the right price, I think the thing I'd say there is don't be too greedy. You can obviously always go in with very high expectations, and I think it's like anything. I think you have to both walk away with a bloodied nose and a win-win scenario. So in getting to not being too greedy, I think you've got to obviously try and understand it from multiple positions, so that you do certain valuations to both understand it from your perspective and from the other party's perspective, because there is no one right way necessarily to look at transactions, because different parties will have different interests and vested interests in what they're trying to do. And in our case, it was also about looking for the opportunity to grow, looking for a strategic fit that would allow Momentum Energy to continue to grow and become the company we thought it could. And that strategic fit was really to give us a solid backing generating company, which Hydro Tasmania was. So then coming together with Hydro Tasmania was interesting. We were a small standalone startup that had grown pretty rapidly, but at the time they purchased us outright, we were probably still 90 people. They were an organisation of, I think, total combined 1,300. So size-wise, culture-wise, we were quite different. But what we did do is look at, straight off the bat, some of the things that made sense from an integration point of view, and tried to leverage some cost benefit where we could. We looked to, we did a rebrand of the company at that time, and you'll see on the photo there what we call the $1 million blobs, or the famous blobs, as our new logo as the Hydro Tasmania Group. So we did a rebranding that really picked up both brand, vision and values. And then we looked for opportunities to grow the brand and grow our linkage to our parent company and our clean energy credentials and our Tasmanian connection, of which we're very proud. Matt Goss in the photo here is one small example of that. Matt is a Tasmanian who rides in the Orica Green Edge team, and we were able to form a relationship and use Matt in both promoting our brand and marketing campaigns and acquisition campaigns. So coming together in the things that make sense, that don't pull away from what your core business is but enhance what you can do, was very important for us. The other key things is obviously staying on or walking away. It was important that we really kept some stability of management when the company was sold, and we managed to do that, and that was, I think, very important. Obviously there's various forms of ways that people will sell businesses. Some will have earn-outs, some will stay, some will leave straight away, but certainly in our case having that continuity of management that stayed on board was very important in keeping stability of both the staff, keeping the culture intact, and keeping really in train the things that we had been working on, so that one doesn't sort of stop and lose ground and start again with new management. As I said earlier, integration was very important on the things that really gave us leverage. Process development obviously continues to evolve even to today, and it is iterative. It wasn't something that on day one we could click our fingers and have every process in place, especially matching up with a larger organisation. But it was about knowing what the key processes were, getting those right, and then continuing to work on the balance. Growth must be controlled and manageable. we've had pretty rapid growth. We've doubled in size for 3 years now. So probably our biggest challenge has been what I'd say is staying ahead of the growth curve, and that really is about the talent of your organisation. It's about looking at where your skills are, where your strengths and weaknesses are in your workforce, and trying to look forward as to where we're going to be in 6, 12, 18 months' time, and bringing in the talent into the organisation so that we can stay ahead of that curve. And that's been tough at times. We haven't always got it right. Where we haven't got it right, it does hurt you. You suddenly find that you haven't quite got the skill sets or the expertise that you need. But as we've gone on, we've certainly got better at that and spend a lot of time and energy now in what I'll call staying ahead of the curve. And then for those that remember the 80s, we've got MC Hammer. You can't touch this. So once we got through the sale process and had a solid backer, it was really important to build the brand and really solidify our marketing efforts into the national market. So now we're operating across 4 states on the East Coast. So we did a number of things that I think were pretty key in what we've achieved. We developed the Smile Power product. So the Smile Power product for us is our product that is backed by clean energy generated in Tasmania out of hydro and wind power. What that allowed us to do was really leverage one of our natural advantages as an organisation and try and match up certainly with a segment of the market that are very focused on understanding where their power is generated. So we're very proud of this product and continue to sell this to today. It's our main product that we sell to businesses and mums and dads' residential homes. We also moved away from the heavy reliance we had in the early days on what I'll call external channels, selling our brand and selling our product, to building a much stronger internal self-reliance on sales. So both our own internal telemarketing, door-to-door, customer service, inbound, really strengthening all those channels so that the main focus is internally created on channels, sales, and not on external channels. Why that's important is because at the end of the day, our people give a damn about the brand and what our business is about. You can't always guarantee that with external channels, where at the end of the day they aren't as passionate about your company, your brand, your history, and your culture. So our internal growth has been really important. We also at that time we had to make some hard calls, and there's one here on moral grounds, and we found ourselves with a couple of channels that we for various reasons had either discovered some of their behaviour was not exactly ethical, or they actually did, in one case, did it publicly themselves and self-destructing. We let those channels go as soon as these circumstances arose. And at the end of the day, even though, once again, that was a painful decision because it took away, in one case, one of our longest standing channels who had brought us a lot of business. At the end of the day, in looking at our values and our behaviours and what we stood for as a company, then there was never a question of keeping them on board, because they were not what we were about, and certainly not what we preach to our staff that we're about as a company. And I think at the end of the day, that was a really positive move for us as a company and what our staff saw in the leadership of the company. We also focus very strongly on staff engagement. We do an annual survey. Surveys can obviously range, but at the end of the day, it more importantly gives us a benchmark on tracking year on year how we're performing and how the staff are feeling about both job engagement and organisation engagement. We find that to be a very effective process in really helping us understand what our strengths are and make sure we're maintaining those, but then importantly as well, focusing on the areas that come up as not being as high as we would otherwise like. So staff is crucial. As with most businesses, our business is about our people. So if we don't have good staff, then really the rest is not going to fly. And last but not least is focusing on a strong culture. We have culture we're very proud of at Momentum Energy. People enjoy working here, they enjoy coming to work. So we focus very hard on celebrating success and having some fun. We started the Ministry of Fun a couple of years ago. Its role is unashamedly to create events and experiences that motivate the staff, give surprise events and the like. But it is all part of creating a culture that, one, as I said, celebrates success, but two, as I said, builds a culture that people actively want to come to work and participate and contribute. And in some of our areas that's not always easy. If you're working in a call centre or working in a credit department chasing up funds outstanding, they're tough jobs. So to try and keep our customer facing staff positive and motivated to what Momentum's about is absolutely essential. So the lessons learned is no one can represent your brand as well as you can. Choose the right partners, don't compromise your standards and ditch those that don't meet your standards, and have your own sales philosophy. We work very hard on selling, being a retail business, and our philosophy is very much about creating an environment where people want to buy from you rather than a push mentality. It's a consultative process where we create the desire for the person to really want to procure from us, and at the end of the day, if we do that well, then the rest takes care of itself, as opposed to a push mentality, which we all certainly are aware of from phone calls and certain door knockers that you may get at your door. Last but not least, The Tiger, Survivor, another great 80s song. What inspires me, and this is a really interesting question when we sort of thought about this slide. I think one of the things is drawing on past experience of where you've seen excellent leadership. I know when I became MD, certainly one of the things I did was sit down and write down and reflect on good people that I'd seen in the past and why. So what was it they did, when, why, how? And that certainly gave me a great starting point of things to remember and to focus on. I'm an unashamed fan of Fremantle. I won't go on to talk about them all day, as my team know, but what I will say is they are a great example at the moment of a team that all play their part. They're not a champion. They're not a team of champions. They don't have any standouts, but what they do have is high standards. They're disciplined and they have discretionary effort and belief. If you can bring those things together in any team, whether it's football or selling energy or running a restaurant, whatever, you're going to have a winning team. The other things that motivate me or inspire me is really seeing people grow within the business. We've made, and I've made, a big investment in quite a few people in Momentum that have grown with us on the journey, and seeing those people grow in their maturity and their career development and being a bigger part of a bigger pie is really satisfying, because it gives you a kick to see that the hard work is getting repaid, and you do get repaid in spades if you develop and hold on to the right people. What you end up with is a great culture and a great team environment, which is what I have with my guys that have been with us for a number of years. And last but not least, is seeing the business continue to grow and evolve, and that's really about setting challenges that people think, gee, you can't do that or you won't do that, and we have done it. And I really am a big believer in setting challenges that give people something to aim at and really like beating the odds. So I think they are the things that, if I had to say, that inspire me would be the key four. And last but not least, what have I learnt over the journey? Well, probably what I've learned in the last 7.5 years is more than I learnt in probably my prior 18 years in business. From being a startup through to a growing, mature company, it's been a hell of a ride. The 6 key points, if I had to say what have I learnt, it would be about being decisive and backing yourself in as a leader. You have to make a call and you have to be confident, because people will follow your lead and they have to be confident in what you're about. You have to have a clear strategy, not be afraid to change or alter your strategy at times if it's needed, but you certainly have to have a clear strategy and articulate that to the troops. You need to know your strengths and weaknesses as a leader, so basically you've got to have good self-awareness, which is not always easy, so things like 360 feedbacks and other processes, you need to get that awareness on a reasonably regular basis, and then importantly build a team around you, and particularly a team that solidifies some of those areas that you may not necessarily be as strong as you might otherwise be. So self-awareness is super important for any leader. I think fourth is just understanding that leadership is lonely. When you're running a small company, running an organisation, you know, the buck stops with you. So at the end of the day, you know, it is a lonely environment at times. So what I've learned is it's very important to have support networks and mechanisms around you that give you an ear to bounce things off, a shoulder to lean on sometimes. So just I think very important to have those what I'll call coping mechanisms that are there at the times that you need. Focus on the culture and celebrate success. I've spoken about that before, but it's really important. Culture of an organisation ultimately will make or break whether your company is successful or not. And last but not least is you have to enjoy what you do. If you don't enjoy what you do, then you make a change. There's nothing worse than waking up and not wanting to go to work because you don't enjoy your job or enjoy where you work or what you do. And I'm voted with my feet certainly once in the last decade where I found myself in a situation that I wasn't enjoying and made a change, enjoying momentum, and the best thing I ever did, but more importantly the stress of staying in something that you don't enjoy you know, is ultimately not where you want to be. So if I've learnt 6 things, they would be the 6 things. Okay, enough talking from me now. I'm going to answer some questions. So thank you to all the people that have sent in the questions. So I'll hopefully get the names right here and work through. So Bianca has asked a question, what are the fundamentals for small business in deciding whether to hold them or walk away? Look, that's a good question, and it's very specific to each and every business. In our case, Bianca, some of the things that played into walking away was we had a look at what was happening in the industry dynamics, so basically between what a drought and other things had brought on, and it came down to a point as to whether our investors were willing to put in the funds that were required to keep the company going or not. So one of the drivers for us to walk away was we had hit a point where the investor appetite had run out, but obviously other aspects may be at what point you are in the investment cycle, in the type of industry you're in, the skills that are going to be required to take the company to the next stage. And once again, a lot of this comes back to are you going to have the funding or the resources to take it there. Hold'em's an interesting one. We had an aspect of that because we had to decide was what we saw happening in the market an aberration. It was only going to last 2 or 3 months. Was this drought going to break or was it going to stay longer term? And really, if you're going to look at Hold'em, you have to have a view as to how long can you sustain if you do decide to hold them before you get yourself in financial distress. So yeah, I think at the end of the day you've got to sort of have a look at all of those aspects, and I think the walk away is really having a clear exit plan as to what is it you're trying to achieve with the business and at what point do you think is the logical exit point. Another question from Laura, in small business, how do you attract the right staff? That's a really good question, Laura. We talk about this often. When Momentum was a small company, as you will know, when you're a smaller company, it is hard to attract good staff at times, depending on where the economy's at. If it's a hot economy, then people will not want to join a small company because they will look at it and see it as risky. Whereas if it's a tight job market, you may have a stronger chance of luring people. I suppose the way we went about it is we had to be a little bit creative. What it meant was in the packaging that we did with the staff at the time, we may have had to be either a little bit more liberal on things like being flexible on working arrangements, in some cases maybe having to pay a bit above the odds to what you might otherwise pay that position or person. But at the end of the day, getting staff when you're a small company can be really tough because, as I said, people won't necessarily leave a secure job in a large company to come to a small company. In our case also, we had some equity participation that we were able to offer certain staff, so creating some incentive to be part of the both the growth and then the selling process of the company certainly worked well. So, but it is a tough gig, I won't lie, but having said that, things have changed. Things like Seek and other online forums now give you such a much cheaper and greater ability of going to market than what things used to be like in days of old with advertising in papers and the like. So, I mean, I think the big advantage today is through Seek and promotion of your company online, you can create a very good presence of what you're about and why people should come and work for you. Next question is from, hopefully I think it's Adele. When would you recommend a business to consider looking at outsourcing? Whilst a large emphasis is placed on building a great team, can we really leverage from outsourcing skills and labour, i.e. overseas? Another good question. Momentum Energy doesn't outsource anything overseas. All our employees are in Australia. This has been a deliberate choice that we've made as a company. It has a number of elements to it. It is about the brand and about the culture and what people experience when they ring through. There is certain elements but that we do outsource domestically in Australia as well, but we do some credit calling through an agency. Where outsourcing comes into play, I would argue, is obviously what is your core business and what are the core skills that are what's fundamental to your business versus what is something that someone else can do at a more efficient and structured way. So rather than you employ two people to do something and then have to have a third as backup if other entities have got dozens of people doing the same thing, there are certain things that just become no-brainers. But I think before you outsource anything, what I'd say is you have to, one, as I said, is it core to what your brand and your processes and culture are about, and are you going to damage that if you outsource it? And secondly, don't outsource something that's not in a controlled, good state of process, because if it's a bad process to start with and you outsource it, then you just outsource a bad process and make it worse. So, yeah, outsourcing is a really interesting one and certainly very topical certainly in the utilities industry. Okay, about 10 minutes to go, so if there's any other questions, please fire them through. Sanjay, how do you choose what industry to go into? Yeah, look, it's a really good question, Sanjay. In energy, obviously, it's a broad market from anything from mums and dads, residential houses, through to small to medium enterprise, SMEs, through to large industrial customers. We operate in a variety of those markets, but at the end of the day, who you go after, at the end of the day, it's a cliche, but it's really about who are going to be the profitable customers, what are the profitable segments to go after. So in our case, it is understanding of the patterns of energy purchasing, what certain industries or small businesses consume, when do they consume the energy, what is the profitability of that market segment, what's their likelihood of paying or going bad on debt. So segmentation is very important, both learning from our existing customers and learning what history has told us about segment behaviour, through to purchasing in, at times, information that will help us understand segments or consumer behaviour, and then really marrying up that intelligence with our sales and marketing processes so that if you know that a certain segment is not a good segment to be in and not a profitable segment, well, obviously don't go creating campaigns that are going to feed straight into that market base. So having an appreciation of what a good customer looks like is absolutely fundamental, and that will be different in different industries. As I said, it could be a usage thing, it could be a credit thing, it could be a seasonal variation, but certainly in energy there is absolute key factors that drive what we view as a good, solid, profitable customer that we want to retain. The sale is the first part, but in energy certainly the absolute key part is retention of the customer so that we don't lose a good customer. So they would be probably the observations I can make on targeting of customers. Okay, we have another question from Chris. Would I go back into the startup space again? That's a really good question, Chris. I probably, I wouldn't say no. I'm not that old that I don't have the energy to probably do it again, so I wouldn't say that I wouldn't at this point in time. I think you do, but you got to have a lot of energy and a lot of passion to do it. But I think having done it once or twice, you do develop that confidence and understanding of what's required. So who knows? Could be there in the future. Okay, I think we're at the end of the questions. So I'll wrap it up now. So thank you very much for listening today. I hope it's been of use in sharing a little bit about the Momentum Energy journey and story of where we come from and where we are now. It's certainly one that we're very proud of as a company, and I hope it's given you some insights today in helping grow your business. I wish you luck in growing your small business enterprise. And if you haven't got a good energy supplier, then please make sure you give Momentum Energy a ring, 1-800-SWITCH. Would love to talk to you. Thanks very much.